From here on out, it's all going downhill. The dollar's strength continues to weaken despite the measures put in place to stop the dip. The banking system is also failing. The only way out is Ripple. Yep, that's a lot, but that's the truth. Cryptocurrency is the only way the U.S. government can recover from this, specifically XRP. Anyway, we have a lot to discuss, and I'm sure with this information, you can finally speculate what's about to happen. But before we get to that, let's roll that intro. As always, welcome to Money Side, your favorite crypto channel. If you're new here, hit that subscribe button and turn on notifications so you get updates when we drop new videos. Don't forget to smash that like button, and you can always leave a comment or a question in the section below.
Of the catastrophic crash on Wall Street rippled out across America. Even those who had never owned shares and who had never benefited from the stock market boom became victims too. The crash had undermined Americans' faith in their fragile banking system, made up of thousands of small-town banks that lacked the size or reputation to convince customers that their money was safe. As confidence in the economy sank further, a domino effect began. In 1931, over 2,000 banks failed.
After the crash, the banks closed. That, I think, affected us a little more seriously, us, meaning us, the people of my stature. Many people had money in the bank, little bit of money, a couple of $100, $1,000 maybe.
There was no infrastructure then. There was no Federal Deposit Insurance Corporation to guarantee people's deposits. There was no way to back up the banks. So if the banks had made bad choices, you as a depositor paid for it. You went to go get your money, it wasn't fair. And then people would hear that the bank down the street wasn't good, and they worried about their own bank, and then that would cause a run on their bank. And it became a terrible, vicious cycle. It's something like 3,000 banks closed in the following couple of years after that. The whole financial system then seemed not just unstable, but worthless.
The collapse of Silicon Valley Bank is causing shockwaves across the entire business world.
With the FDIC now in control, customers can access up to $250,000 on Monday. But as ABC's Jacqueline Lee explains, that's not enough for many companies left struggling to manage their finances.
Silicon Valley Bank, the nation's 16th largest bank, was shut down by the FDIC on Friday after depositors hurried to withdraw money amid concerns over the bank's health.
All our money is in the bank. I don't know how we're going to do our payroll.
Not well known outside Silicon Valley, the bank's customers are largely in the tech and venture capital space, with branches in California and Massachusetts. The bank did business with companies like Shopify, ZipRecruiter, and Pinterest. In an SEC filing, a streaming provider Roku said it had $487 million, or 26% of its cash reserves with the bank. The company saying their deposits were largely uninsured. Adrian Mendoza runs a venture capital firm in Boston.
Dollars were being pulled faster than the bank actually had.
According to the FDIC, Silicon Valley Bank had approximately $209 billion in assets and $175 billion in deposits at the end of last year. The bank's collapse rattled financial markets, the Dow Jones finishing the week down more than 300 points.
When banks experience financial losses, it is and should be a matter of concern.
The FDIC, along with the Treasury Department, say they have a process to deal with bank failures like this, insisting the banking system has been shored up since the financial crisis 15 years ago.
They have very good risk management since the financial crisis because of changes brought after the crisis. So I think the banking system is probably as strong as it's ever been.
And it's important to know the FDIC is insured up to $250,000 per depositor. The FDIC announcing all insured depositors will receive their money no later than Monday. This is Jacqueline Lee, ABC News, New York.
Jacqueline, thank you. And Governor Newsom issuing a statement today saying he's been in touch with the White House and Treasury on this, writing, "Everyone is working with FDIC to stabilize the situation as quickly as possible to protect jobs, people's livelihoods, and the entire innovation ecosystem that has served as a tentpole for our economy."
Hello, I'm Mark Brown. Get more great ABC7 content by clicking the subscribe button for our YouTube channel. And download the ABC7 Los Angeles streaming app on Fire TV, Android TV, Apple TV, and Roku to watch on your TV.
What happened years ago in the banking system is now happening again, and this is affecting the strength of the dollar. Don't even get me started on the inflation rate that's been happening since last year. With this new development, recession is almost inevitable. The worst part about this story is that the U.S. government is fighting the only salvation that could help them get out of their current predicament, XRP. John Deaton made a funny joke when he tweeted, "Now it makes sense," as a response to 1 month ago, Jim Cramer urged investors to buy Silicon Valley Bank stock, SIVB. Today, the bank was closed by California regulators, making it the second largest banking failure in U.S. history. But here's the most interesting part about it. Crypto is continually improving their system. We now have KYC, which will help investors, especially in the crypto world, protect their investments against fraud. For instance, if an exchange collapses, users can still withdraw their money since their crypto is stored in self-hosting wallets. Listen to this.
Mr. Graywall, the CEO of Coinbase, Mr. Armstrong's made comments in the past in support of individuals moving crypto assets off exchanges and to self-hosted wallet, self-custody. Do you believe that protecting the customer's ability to eliminate third-party risk through self-custody is an important first step in consumer protection?
I do, Congressman. Yes.
So for people that were caught in, bad investments in the past, because this area has been unregulated, people have been abusive, outright misrepresented things. If they had custody of the assets and it was in their possession, what was their risk if the centrally managed unit collapsed or went bankrupt?
There would be none, Congressman.
Because they actually own their property. It's sort of like if the bank goes out of business and you have all your cash, even if you have an account with the bank, well, you didn't lose any money because you had your cash. Now, not everyone's going to choose to do that, but we certainly shouldn't prohibit it. Just like cash, we've made it almost illegal, but not entirely. And in this space, we've got people that are overtly trying to make self-custody illegal.
As crypto continues to upgrade, the banking system is on a free fall, and so is the U.S. dollar currency. We need to reevaluate our investments, especially if you have stocks. Crypto is the only way to survive the coming storm, even though the U.S. government continues to launch war against this type of investment in the U.S. That's actually the reason why Binance decided to halt their company from exchanging dollars for crypto in U.S. soil. From my perspective, the U.S. government senses that they are behind, and that's why they're attacking the only industry that could potentially overthrow the world reserve currency. I believe the government should work with crypto instead of fighting them. And if only they worked with Ripple, the government could have been working on a CBDC by now, and that could strengthen the dollar's status as the world reserve currency. All we have to do is trust the crypto world, even though everyone keeps saying that it's like the Wild West. Keep on holding on to those XRP, since it's the only crypto that could turn you into a millionaire in the near future. As always, do your own research and always trade safely, guys. Please keep in mind, we're not a licensed financial advisor. All videos on this channel are intended for entertainment purposes only. Let us know what you think in the comments section below, and let's have a conversation. Thank you very much for watching. Don't forget to like this video, and please click on that subscribe button below and turn on notifications so you get informed whenever we post our amazing content. Thanks again, and we'll look forward to seeing you on the next Money Side.